Hey everyone, Sierra here with Magee Insurance. I wanted to put a quick video together today and talk to you all about the difference between market value of your home and replacement cost, dwelling coverage on your homeowner's policy. Then we also have another factor, which are home appraisals. But let's start with market value. So as we all know, the market fluctuates. Market value is taking into consideration your house, the land, and its location. So, for example, you could have a property in Short Pump and take that identical size home and move it to another county in Virginia and see a major disparity in cost to purchase the property. You're obviously going to pay a higher premium for certain zip codes, and that's based on a multitude of factors, demand in those areas, school systems, and other factors that impact the market value of your home. Then we have replacement cost construction coverage on your dwelling homeowners policy. And those two can be remarkably different, meaning what we advise a client is the replacement cost of their home. That figure could be higher or lower than the market value. So on a replacement estimate, what we're doing is we are going in and looking at all the factors of your particular home, the year it was built, the square footage, the siding, the placement of windows, crown molding, the flooring finishes. Is it one level, two level? Is there a basement? Is it finished or unfinished? All those factors go into a software and determine what the cost would be per square foot to rebuild your home. Now, those amounts are coming in much greater today than they were 12 or 24 months ago. We have definitely seen supply chain issues, and that has impacted the cost of rebuilding homes. So if you're getting your renewals, you're probably seeing a spike in the dwelling coverage, and that's to take that into consideration to ensure that you are still adequately covered if the house were to burn down and need to be rebuilt. But I just want to stress again that the cost to rebuild your home is never going to coincide with the market value. A big example are, older homes. We have a lot of homes in the fan that were, built in 1910, 1915. The quality of construction and the finishes then are different than some of the new homes that we're seeing built today. So again, that's going to drive up the cost per square foot because at the end of the day, we are insuring you for replacement cost. And what that means is the home needs to be built and put back exactly like it was with the same quality of finishes at the cost to do it today. So that's the difference between market value and replacement cost. Then you have your home appraisal. So the home appraisal is provided from the county, and that does take into consideration the house and the land. That does tend to run lower than market value, and it does tend to come in lower than often what we are needing to insure a home for to ensure that it can be rebuilt if it were to burn down. But again, those appraisals from the county, they are impacted by sales in the area versus foreclosures and whatnot. And that is the amount that they use to assess and determine your taxes for the county. So again, the home appraisal, or I guess it's more commonly known as your home assessment from the county. We have that, we have your market value. And then lastly, from an insurance perspective, what we are focused on is the cost to rebuild your home. So again, if the house burns down, we need to put it back exactly like it was. And that number is not always going to coincide with what you paid for your home. So just a little tip from us to help you understand those differences. And we're always happy to have a one-on-one discussion and go through a cost guide with you so you can see the factors that are involved in determining the cost to rebuild your home. And we're always happy to go through that with you and make any adjustments that you might need to see or changes that you might have. Thank you.